Welcome to the Daily Update Podcast, where I'll go over the action in the market for Thursday, August 21st, and we'll see how things look for Friday, August 22nd. Going over the market action on Thursday, the S&P 500 experienced a volatile session, ideal for day traders looking to capitalize on small price movements. However, the index trended slightly lower, closing down 0.4% at approximately the 6370 level. This choppiness reflects a market in wait-and-see mode, with indecision evident as the index opened below the daily pivot at 6383, found support at S1 at around 6357, and hit resistance at the unchanged level. A notable shift is underway in the market's posture. There continues to be rotation from growth to defensive sectors. Large cap growth stocks, including names such as Amazon, Tesla, and Meta, underperformed, each down less than 1%. Meanwhile, defensive sectors, including staples and utilities, showed relative strength, though they too closed slightly lower. Energy and financials held up better, with financials and the SMH Semiconductor ETF remaining above their 50-day moving averages, though signs of weakness are emerging. Looking at the technical indicators, the S&P 500 closed just below its 20-period simple and exponential moving averages, signaling a short-term negative trend. However, the intermediate and long-term trends remain positive, though some cracks are appearing in the intermediate term. Volume continues to be below average, and the Stochh RSI indicator is showing extreme negative readings. Other indicators, however, lack strong conviction, reinforcing the market's current indecision. On the economic front, Thursday painted a mixed picture. Initial jobless claims rose to 235,000, up from 224,000, with continuing claims remaining elevated, suggesting longer unemployment periods. The Philadelphia Fed Index came in weaker than expected at negative 0.3 against expectations of a reading of 9. Meanwhile, the global U.S. manufacturing PMI improved to 53.3, above the 50 threshold, indicating expansion, but the market is interpreting this as potentially inflationary. Existing home sales beat expectations, but the leading economic index dropped 0.1%, remaining below the critical threshold and signaling potential recession risks. Adding to the market's cautious tone, comments from Federal Reserve officials leaned hawkish. Kansas City Fed President Schmidt and Cleveland Fed President Hammack expressed reluctance to cut rates soon, citing persistent inflation. This disappointed the markets, contributing to a shift in sentiment from positive to neutral. The VIX ticked up slightly but still remains below 20, indicating moderate concern. The dollar showed slight strength, which could pressure stocks if sustained, while interest rates at 4.33% are still below the critical 4.5% level. Looking ahead to Friday, August 22nd, all eyes are on Fed Reserve Chair Jerome Powell's Jackson Hole speech. Investors are keenly awaiting clarity on the Fed's monetary policy direction. Powell's 2022 Jackson Hole remarks triggered a sharp market reversal, so the markets are understandably cautious. A wait-and-see tone from Powell could stabilize the markets if perceived as non-alarmist. A hawkish stance might reinforce the defensive shift that we've been seeing, while a dovish tone could spark renewed optimism in growth stocks. Looking at seasonality, August 22nd has historically shown neutral to negative performance in post-election years, and with options expiration week wrapping up, volatility could persist. So what's the overall outlook? In the short term, the market is negative, sitting below key moving averages and lacking conviction. The intermediate and long-term trends remain positive but are showing signs of weakening. Key risks to watch include rising dollar strength, interest rates if they get close to 4.5%, and the tone of Powell's speech. It's always a good idea to keep an eye on the daily pivot points and growth-to-value ratios and any macroeconomic indicators for further clues on the market's next move. I hope you found this podcast helpful. For more in-depth analysis and commentary, the full-length daily video update is available on YouTube and Rumble right when the market closes each day. To access the videos immediately after they are available, or to access the daily newsletter, please click on the links below.